All right, let's talk about profit first because it is something near and dear to my heart and something that it is a new way of thinking. It is prioritizing your profit before your expenses, which is the wonky way for a lot of accountants to think about it, but it really does make sense from a cash management perspective. When you want to deal with your numbers, though, when you're setting a budget and forecasting cash, it's important that you have a system in place. Before we dive into that system, I want to show you an overview of what these allocations look like. You've seen them and how I've actually been able to put them into the budget, into even cash flow forecasting, just to make sure that you are fully aligned. Now, the idea about profit first is quite simple. And it starts with the idea that if you have a tube of toothpaste of all things, guess what happens when you have an empty tube of toothpaste? You can find a little bit of toothpaste to brush your teeth. And then the next day, you'll still be able to find just a little bit until you've done that too many times. The idea is, I got to go to the store and get some new toothpaste. I want to keep this toothpaste example and also give you another example of health coaching and fitness, because these are the two primary ideas you're going to want to realize and see as you're thinking about managing your money and managing your cash flow. So the other idea is the fitness industry. How do we lose weight? I love the analogies between weight loss and financial gain. I love going to the gym. I've had to apply these things for myself. There are a few things when we think about losing weight. We want to have smaller portions, right? Smaller plates. By having these smaller plates, we are not going to eat as much. In Profit First, we are going to give ourselves these smaller plates through allocations. Allocations are taking a part of the pie and putting it here, right? So we're going to put that pie, instead of having that whole pie on that one big plate, we're going to allocate. We're going to take a piece here, we're going to take a piece there, to smaller plates. Now, the question is, how much do you put on that one plate? How much do you put on the second plate and the third and the fourth? That is going to vary based off of how much money your business is actually making. The next thing that we were taught in the health industry is that not all food is the exact same. Meaning, if I eat my sweets and my carbs before I eat my vegetables, I'm not going to really eat that many vegetables. The idea now is to prioritize these plates in terms of the benefits to us. And because of this book, Profit First, the first plate you're allocating money to is your profit account. This is very different because in the accounting industry, we are taught that profit equals sales minus expenses. Profit First completely flips the switch and says that sales minus profit equals expenses. What is left over, those expenses, are what we then are going to play around with and build our budget. It's a very different way of thinking about it, but the results that businesses get using this method, it's fantastic. You are not going to need to worry about cash flow again. To be successful in using Profit First, there are a few things that you definitely want to have. You want to have a full understanding of what is this exactly. So that's why we're watching this video. Number two, the idea about cash management, especially if you're an entrepreneur and you are the primary responsible for doing all this stuff, is you are going to be looking at your phone. You're going to be looking at your bank balance, right? As we already said, when we have a big pie in one bank balance, it's going to be hard for us to be able to allocate. It's going to be hard for us to be able to actually hit these financial goals. So what we're going to do is we're going to open up several bank accounts related to these different categories, which are profit, your owner pay, your taxes, and your operating expenses. And then you're going to obviously have a fifth, which is that account that receives the revenue, that receives the funds from your customers. So based off Profit First, there are different levels of allocations based off of how much revenue you make. So now I'm just going to show you a little something as we get into more of the technical stuff about Profit First. So Profit First, how are things calculated? You're going to have to understand some of these numbers and these metrics. They're not hard. Net revenue. So this is written by an entrepreneur that has changed the game in the accounting world. So I consider net revenue to be your gross profit, which is your sales minus your cost of services if you're a service provider, or your cost goods sold if you are selling widgets, products, manufacturing, all that kind of stuff, right? So that is going to be this is taken from profit first, but the idea is your gross profit. Underneath here, we have different revenue marks. We have revenue mark less than 250,000 gross profit. I need to between 250 and 500K in gross profit. Another one between 500 and 1 million, 1 million to 5 million, 5 million to 10 million, and 10 million to 50 million. If you're above 50 million, you're probably not watching this video. So what do we do? So we now know that these are our gross profit marks. From there, we are going to allocate, and it has to equal 100 percentages to operating expenses, to owner pay, to taxes, and to profit. So as you can see in this example, let's imagine that you're hitting about 1.5 million, right? So our operating owner is going to be 50, 20, 15, and 15. So it all allocates there. So this is looking at the annual. So we now have these ideas of where and how we should allocate money. Now, these are benchmarks. They're not a gold standard. And the reason why is that every business is unique. Every industry is unique. And even how you're running your business is unique, right? The idea is that you look at this and you actually see, can you play around with this? Can you adjust things? Because your goal as the business owner is to increase your profit and is to increase your owner pay to an extent, and then more your profit, because the taxes on your profit are going to be less than the taxes on your owner pay traditionally. So this is the idea about profit first. Now, for you to actually get started, you are important, and your accountant, if you have an accountant, is also quite important. And what does that mean? It means that you don't want to spend your time randomly paying bills, paying yourself, delaying it, etc. So having a set schedule is very important when it comes to your cash flow and your money management in general. And traditionally, that set schedule is when you are paying out vendors and yourself. Similarly, you want to be strategic of however your business is making money, of the invoicing and the frequency of the invoicing, because both those factors impact your cash flow significantly. And if you are tight on cash flow, then you really want to make sure that you have focused on these things. So it's really looking at the frequency of doing the schedule. So I suggest, as well as in the book, that you want to pay vendors and pay yourself bi-weekly. Now, that definition, depending on where you live, is it's odd. Is it twice a month? Is it twice a week? It is twice a month. So you will be paying yourself twice a month. Now, in the book, it's suggested on the 10th and the 25th. Now, you still want to make sure, looking at your credit cards and looking at all your outflows, if that is the most aligned, and that is to pay vendors and that is to pay yourself. So that is the second one. But as we're on the topic, it's important for you to take this time to assess, do you have an overview of the cadence of your cash flow? When you have that overview of the cadence of your cash flow, of all those incoming things, all those outcoming things, it's really important. Now, we definitely cover this in our Manage Your Money Like a Boss training, which is everything to help you manage your money. The third thing that they cover in the Profit First book is that you want to remove temptation. Now imagine this, you open up your bank account, wow, you got so much money there, right? And you're like, okay, why don't I invest in that marketing campaign? Okay, why don't I hire that? Well, it's easy when we're looking at that big balance to take away, right? Take away, to use it, because our mind is like, why not? I don't have anything to lose. And so the idea when you have multiple bank accounts and that you're hiding some, you're almost putting them in vaults, like your taxes, your profit, then it's going to be a lot harder. You're not going to have as much temptation to take that money out, to pay Peter, to pay Paul, rob Peter to rob, I don't even know what that money saying is. But the whole goal is to avoid temptation, and the bank accounts and this whole process really does help. Now, consistency is everything. You want a routine. We already know when it comes to your money, when it comes to your mindset, when it comes to all this stuff, that when you have a routine to follow, the habit, it's easy, it's happening, you're going to follow it. So that's why we have a very set schedule to pay your vendors, to pay yourself, and even to invoice your customers. All of this, when you have the system in place, your business is going to get so much easier. So, this is an overview of the profit first, and you've even now seen the allocations that are related to the certain different levels of revenue. So if you have found this interesting and you want to take yourself to the next level, then come join me in Manage Your Money Like a Boss training, where you get to really dive deep into all of the things, and you have support along the way to guide you in your financial journey. I put the link below. I also have some templates for you to get started to check out your allocations on Profit First. Ciao.